A simple desk in the corner of your spare room could save you over $1,000 on your taxes this year, but only if your home office passes one crucial rule the IRS looks for. If you work from home, even just a few days a week, you might qualify for the home office deduction. And despite what you've heard on the internet, it is not an automatic audit red flag. The IRS approves millions of these claims every single year. So why do so many freelancers avoid claiming this deduction? Because there's a myth floating around that claiming a home office practically guarantees an IRS audit. I've heard people say it's a red flag, that it triggers automatic scrutiny, that it's not worth the risk. None of that is true. The IRS approves millions of home office deductions every single year. The key is following the rules correctly. Let me show you exactly what those rules are, and by the end of this video, you'll know whether you qualify and how much you can save. Rule 1 is regular use. This means you use the space on a consistent basis for your business. It doesn't have to be every single day. A few times a week is fine. What they don't want is someone claiming a home office for a desk they've used twice all year. Regular just means predictable and ongoing. Rule 2 is the big one, and this is where most people get tripped up. The space must be used exclusively for your business. And exclusive does not mean mostly. It doesn't mean except when I have guests over. It doesn't mean except on weekends. Exclusive means 100% of the time. That space is used only for work. If there's a bed in that room, even if you only sleep there 3 nights a month, the IRS considers it a bedroom with a laptop, not a home office. The entire room or the clearly defined portion of it must be exclusively business. Here are the most common ways people break the exclusive use rule without realizing it. Eating dinner at your desk while watching Netflix, that's personal use. Letting your kids do homework at your desk, personal use. Storing your holiday decorations in the corner of your office, unfortunately, also personal use. The desk itself doesn't need to be exclusive, the entire space must be. Now, there are 2 exceptions to the exclusive use rule. If you run a daycare business from your home, you can claim a home office even if the space is used for living activities during non-business hours. Same goes for storage. If you store inventory or product samples in your home, the exclusive use rule is relaxed for that space. But for most freelancers and consultants, exclusive means exactly what it sounds like. Once you've confirmed you qualify, you get to choose between 2 ways to calculate your deduction. The simplified method gives you $5 per square foot of office space, up to 300 square feet. That's a maximum deduction of $1,500, no questions asked. No receipts, no calculations, no depreciation. It's the easy button. Then there's the regular method. This is more paperwork, but it can give you a bigger deduction if your home office takes up a significant portion of your home. You measure your office square footage and divide by your total home square footage. That gives you a percentage. If your office is 150 square feet and your home is 1,500 square feet, your business use percentage is 10%. Once you have that percentage, you apply it to your actual home expenses. That means 10% of your rent or mortgage interest, 10% of your utilities, 10% of your homeowner's insurance, and even 10% of your internet bill. All of those become deductible business expenses. Let's walk through the actual numbers so you can see what this looks like in real life. Say your rent is $1,200 per month. 10% is $120 per month, which is $1,440 for the year. Your utilities average $200 per month. 10% of that is $20 per month, another $240 per year. Your internet is $80 per month. 10% is $8 per month, that's $96. And if you have renters or homeowners insurance, say $30 per month, 10% is $3 per month, another $36. So total deductions from the regular method add up to $1,812. If you're in the 22% tax bracket, that saves you roughly $399. And that's before we even get to the things inside your office. But here's the serious catch with the regular method, and this is the part most tax bloggers don't emphasize enough. If you own your home, you're also required to depreciate the value of your home on the office portion. Depreciation gives you a tax break now, which sounds great, but here's the problem. When you eventually sell your house, the IRS wants that depreciation back. It's called depreciation recapture, and it's taxed at a rate of up to 25%. So that deduction you took today comes back as a tax bill at closing. This catches a lot of people off guard. For most freelancers, the simplified method is the smarter choice. You get up to $1,500 with no depreciation to track, no forms to file beyond a simple election, and no recapture waiting for you down the road. The regular method can give you a bit more if your home is expensive and your office is a large percentage. But the difference is usually small, and the complexity is not worth it. So let's put them side by side. The simplified method gives you $1,500, takes 5 minutes to calculate, and has 0 strings attached. The regular method gives you $1,812 in this example, which is about $312 more, but it requires Form 8829, depreciation tracking, and eventually depreciation recapture when you sell your home. Is $312 worth years of record keeping and a future tax bill? For most freelancers, the answer is no. Simplified wins for simplicity and peace of mind. One more thing before we wrap up. The home office deduction covers the space itself, but it does not cover the things you put inside the space. Your monitor, your chair, your desk, your lamp, your printer, your surge protector. These are separate business expenses. If you buy them specifically for your office, you deduct 100% of the cost. If you bought them before starting your business and now use them for work, you deduct the business percentage. The home office deduction and your equipment deductions are completely separate. You get both. The home office deduction is one of the most valuable tax breaks available to freelancers and remote workers. The simplified method gets you up to $1,500 with almost no paperwork. Use your space exclusively. Choose the simplified method and claim what's yours. You earned it.